May profits be upon you. Welcome to another weekly market forecast. We're looking at the Euro USD, the Euro USD. First thing we need to mention, missiles are flying in the Middle East. Iraq, Iran is in conflict with the US and Israel. Missiles are flying. The Ayatollah has been killed. Lots of tension. That means the US dollar, a safe haven, is going to see some gains. All right. People are going to take their money out of the riskier assets like the stock market and put it towards safe havens like the US dollar, like gold and silver, like the Swiss franc, and bonds. All right. In times of tension, that's what people do. They want to the first thing they think about is saving their capital, right? Protecting their capital, rather. All right, so let's look at the monthly Euro USD chart. This is the monthly. Each candle represents a month. We made a high here. All right, we made a lower high here. And this was the potential site for a lower high. I cited this bearish fair value, you have a order block here. All right, you can see the bullish movement is overtaken by the bearish impulsive move. All right, and that created an order block with a fair value gap. All right, and that is what validates an order block for me. If I don't see the market displaced to the downside with a gap, a fair value gap, I don't trust the order block. All right, anyway, price moved away, created a break of structure, which makes this market bearish, right? And then you wait for the pullback, which happened here. Price pulled back. We dipped below, sweeping the sell side liquidity, and then another move up, sweeping the buy side liquidity here. All of this is internal, folks. All of this is internal. These lows and highs are internal. All right. The market manipulated to the downside and then distributed to the upside. We are still in a pullback. That's the main takeaway from this. We are still in a pullback after this bearish move down. Got it? All right. So, how do we know if the pullback is over or not? Well, we look for confluences. One, we have this bearish order block on the monthly. Two, we have the highs tending to trend, adhering to that trend line there. All right, just marking structure. We're not taking buys and sells off of trend lines. All right, we're using for structure points. All right. And I want you to see that we have left this area here, this area here. All right, this is all what do you call fair value. All right, the market has not offered this fair value yet, and these gaps the market tends to use as draws to liquidity. Now, we've taken out an external liquidity point here, this high, which is internal. All right, another one here, another one here, another one here. Those are internal points. All right, but they are external. All right, what we look for is ERL to IRL, external range liquidity to internal range liquidity, external range liquidity to internal range liquidity to external range liquidity. This is external. This is internal. We're looking for fair value gaps and order blocks for the internal range liquidity, and the externals are highs and lows. All right, and this is the nature of a trend: higher high, higher low, higher high, higher low. That's we're looking for external range liquidity to be overtaken by to after external range is taken, we want to look for the market to reach for internal range in order to move for the next external range liquidity to continue the upward trend. All right. In this case, I'm looking for this pullback to end. What would be an ending structure? A bearish engulfer, like something like that. All right. A bearish engulfer at at a point of confluence, a resistance area, an area of resistance where there's some confluence, and this is one of them. All right, let's go down to the weekly. I hope I didn't confuse anybody with that ridiculous sounding explanation. But why do I have this channel here? Because the market seems to have held to it from this low to this low. All right, from this high to that high. All I did was move this line up. Sorry, move this line up to here. That's all I did, and uh, what, I came up with this. You're going to see this clearly, more clear on the daily time frame. But what I want you to see is that the market is, uh, you can see it kind of, what do you call it? Expanding to the upside, breaking that internal high. And then we took out the buy side liquidity here. So, uh, the problem is we didn't trade through that high. What we did was we swept the buy side liquidity and mitigated that bearish order block there, and then came back within the range. This is a bearish indication to me, folks. All right, but you don't have to accept that. What I accept is the fact that we can see the bullish fair value gap was traded back into, and the market did not push higher. It respected the 50% of this big old wick here, and with that reach, but it failed. And then we have a bearish engulfer on the weekly time frame to the downside. So what I look for is the market to respect this order block here, the bullish movement up, overtaken by a stronger bearish movement down, and a close below that low on a weekly basis. I'm expecting the market to reach lower towards this low, to trade towards that low on the next couple of candles. All right. What the market did was it opened here, pushed down, pushed up into the order block, and then you saw the little rejection there. We'll see it clearly on the next slide, on the next time frame. We'll go to the daily. All right, and you can see one I want you to see is, look at the midpoint of this channel. All right, this is the midpoint of the channel here. And what I want you to notice is how the market played on it and respected it. All right, and you can see it played on it perfectly here. I was wondering if the market would bang right through it or gather up, accumulate orders there. But you can see how the market is respecting it. A breakthrough would have me thinking that this is going to act as resistance. All right. I want you to also see there was a bullish fair value gap here. All right. The market ran right through it. Right. So what does that usually mean? That we may invert that bullish fair value gap to a bearish one. And you can see the market is respecting that as resistance, and I'm looking for the market to head downwards because of the tensions in the Middle East. I love the fact that the market respected this order block here, right? You can see how it used it to move up, but I think this is going to ultimately fail. Why? Because of the tensions, because of the strength you're going to see in the US dollar. I'm expecting, as long as this conflict is still a source of tension. All right. And I think we're going to be heading towards these lows. Let me get that out of the way. All right. So if we go down to the 4-hour, we might be able to see it a little bit clearer. All right. You'll, you see that circle I have there. I'm looking at this high here. I'm looking at a gap, a Actually, there's no gap open, right? Not yet. The market hasn't. The market's just opening. All right. I just noticed the market's just opening. So I am looking for a possible pullback to this area to take that high. Boom. But ultimately to pull back down. I'm looking for this high. I'm keeping my eye on that high because I don't think it goes any higher. There is an order block here that the market is obviously respecting, right? Can I get it? Yeah, there you go. All right. Yeah. So uh there's down, there's an up movement that took some buy side liquidity, and then we ultimately started to displace downward, closing below this low. All right. The market came back up to retest it, and we did go lower, but it did not take out the sell side liquidity. I believe that sell side liquidity is about to be targeted because it did not lead to a new high. It becomes a liquidity target. You understand? That's this high didn't lead to a new low. All right, and I'm looking for a sweep of that high. You see how the market is respecting this inverted fair value gap as resistance now. So cited here and here. I'm looking for maybe we might see the market push back, pull back, and then down before it just ultimately just heads down towards this first target here, which is at the bullish order block here. The bullish order block has already been mitigated once, so I don't believe this low is going to hold price when it gets down here. I think we'll probably be heading towards this low here, and then ultimately we'll see how the market reacts to this bullish fair value gap. I do believe it will fall. That is my suspicion because uh, once we start trading below the midpoint of this upward channel, I think that it'll be bearish from that point on, as long as the conflict lasts. Okay, I think we're going to be heading towards this low. Yeah, yeah. All right, because this is also the down move before the up move. I think this is an area of fair value, and the market's probably going to be targeting that. All right, and that is at the support side of the ascending channel here. So this is going to be an area I'm going to watch very carefully. A breakthrough here, a break and close on a weekly uh, basis, on a daily or weekly basis, is going to be a pretty sure indication of the market, the market's direction. Yeah, and which I believe is going to be bearish as the conflict continues. So here's my weekly goal here. That might be a good ways off. We might not reach that goal. We might not reach that low, right? But once we are closed below this low, which is the last low that before this high was made, this channel had a breakout here that failed. Price moved back into the consolidation, and I think we're going to be heading towards these downs, the lows here. I do believe that. So we'll see. But I am bearish in this market, just to let you know, so that you have uh, no confusion. Think that we're heading down as the U.S. dollar gains strength. I will see you in the next market. I'll see you in the next video. I thank you for watching, and may profits be upon you.